Welcome to Capital Conversations. I'm Glen Gould. Today we're talking about one document set that separates funded founders from frustrated applicants, the Lender-Ready Financial Package. I'll walk you step by step through what lenders want, how to format it, and the language that speeds approvals. If you're applying for a line, an SBA loan, term debt, or an asset-based facility, this episode is for you.
Quick hook. Imagine a SaaS founder I worked with who walked into a small bank with messy bank statements, a long handwritten explanation of revenue swings, and no one-page summary. The bank flagged too many questions, priced the loan high, and required extensive clarifications. 6 weeks later, the founder returned with a clean packet, single-page executive summary, 3 tidy years of financials, clear customer contracts, and a projection tied to existing sales pipelines. The result? Approval in 2 weeks at a better rate. That turnaround wasn't luck. It was packaging.
Why packaging matters. Lenders are risk managers. They skim for credibility first, then dive into the math to quantify risk. A single-page summary, which I'll show you how to build, is the first impression. If that page answers 3 core questions quickly, you get a deeper review. If it doesn't, your packet gets pushed back for clarification, underwriting time balloons, and sometimes you get a denial that could have been avoided. Those 3 questions are simple. 1. What does the business do and who pays? 2. Where does cash come from and go? And 3. What's the plan to repay? Answer those up front and you win time and trust. Now let's move into the core document checklist, the backbone of every lender packet.
Core document checklist. Start with financial statements, a clean profit and loss, balance sheet, and cash flow statement for the last 3 years if you have them, plus year-to-date month by month for the current year. Make the statements readable. Remove clutter, label one-off items, and include notes for anything unusual. Lenders scan for consistent revenue recognition and realistic cost assumptions.
Include tax returns for matching years. Underwriters often reconcile tax returns to company books. Provide bank statements for the last 3 to 6 months and, when possible, a bank reconciliation that matches to your cash flow statement. If you have business credit cards, include statements and a short schedule of which cards are personal versus business.
Contracts and material agreements are next. Major customer contracts, supplier agreements, lease contracts, equipment purchase orders, anything that ties revenue or collateral to a documented source. For subscription businesses, include MRR, churn, ARPA, and an aged receivable schedule. For product companies, include recent purchase orders and invoice aging. The goal is to give the underwriter direct evidence that revenue is recurring or predictable.
Formatting rules that matter. PDFs for fixed documents, Excel for models where you expect questions, and a one-page summary first in the packet. Name files clearly. 01 executive-summary.pdf, 02 P&L 2023.pdf, 03 balance sheet 2023.xlsx, 04 tax return 2022.pdf. That numbered approach makes underwriting easier and reduces back and forth. Now let's talk narrative and numbers. The executive summary should be a tight narrative and a data snapshot. Start with one sentence describing the business and market. Then a short paragraph on the use of proceeds, exactly what the loan will fund and why it improves repayment. Add 2 rows of KPIs, recent revenue run rate, and 12-month trailing cash flow, plus the debt service coverage ratio under the loan scenario. Be explicit. Don't make the underwriter hunt for the numbers. When you present projections, tie them to real drivers. Don't say, "We'll grow 50%, without showing sales pipeline, contract conversion rates, or price increases that support that growth. Use conservative assumptions where possible, and flag upside scenarios separately. Underwriters respect prudence. Aggressive projections without support are a red flag. Alternative exhibits are powerful when traditional collateral is light. Customer contracts with committed revenue can substitute for fixed asset collateral. A rolling purchase order book can support a working capital facility. For equipment-light services, build an accounts receivable aging report and historic collection rates. If you have a strong anchor customer, include a short customer reference letter confirming terms. Remember, documents that convert claims into verifiable cash flows dramatically lower perceived risk.
Packaging logistics. How you deliver matters. Use secure file sharing with view-only links for large banks and a single zipped packet for community lenders who prefer attachments. Provide permissioned access to Excel models if you expect scenario analysis. Keep a cover sheet with contact points for follow-up, name, role, phone, and best email. If you're sharing via a portal, ensure file names match the cover sheet index so an underwriter can click and verify instantly.
Negotiation levers and common red flags. Lenders will push on sudden revenue drops, unexplained transfers, inconsistent P&L categories, and high owner draws. Fixes: add a reconciliation memo for fluctuations, normalize owner compensation with a schedule, and provide board or owner approval letters for related party transactions. Covenant design tip: offer clear, measurable covenants tied to EBITDA or DSCR, and propose reporting frequency you can consistently meet. If underwriting balks at a gap, consider a short-term guarantee or a higher initial pricing tier that converts after 90 days of performance.
Action Plan Recap, a 30-60-90 playbook. Day 0 to 30, assemble core documents, run a reconciliation of books to tax, and build that one-page executive summary. Day 30 to 60, obtain customer confirmations, finalize projections with assumptions tied to your sales pipeline, and prepare alternative exhibits like invoices and purchase orders. Day 60 to 90, test your packet with a trusted advisor or lender contact, address any follow-up items, and prepare the covenant compliance schedule you'll report on after closing. A short checklist works wonders. Executive summary, 3 years P&L, BS, CF, tax returns, bank statements, contracts, projections, exhibit folder, file index.
A few closing cautions. Templates are helpful, but customize for industry and lender type. Verify numbers. Never submit an unsupported projection. And this isn't legal or tax advice. Consult your accountant or counsel for structuring questions.
If you want a one-page executive summary template, start with business description, transaction summary, use of proceeds, historic financial snapshot, key KPIs, collateral summary, and a short management paragraph. Put the loan ask and proposed terms right at the top so an underwriter sees it immediately.
Thanks for listening. If this episode helped you see how a clearer packet gets faster answers, do me a favor, subscribe to Capital Conversations so you don't miss future episodes on funding and fundraising strategy. If you liked this breakdown, hit subscribe and share it with a founder who's preparing to apply.
Thank you for joining us on Capital Conversations. I hope today's discussion provided valuable insights for your funding journey. Remember, securing the right capital is a crucial step in building a successful business. Keep building. Let's talk capital. Until our next conversation.